call center software company Aircall is valued at more than $1 billion in a new funding round. The company raised $120 million from investors in a round led by Goldman Sachs asset management arm. The company is eyeing new acquisitions and aiming to go public within 2 years. Founded back in 2014 in France, the company plans to expand into video calls and voice intelligence, which creates searchable logs of phone conversations. Joining us to discuss further is Dumebi Iyeke, analyst with Financial Derivatives Company Limited. Dumebi, good morning to you.
Good morning.
Thanks for joining us.
Thank you.
Let's start with Aircall. What's the value proposition from the company with this $1 billion valuation for a customer service software company?
Yes. So let's start with what Aircall is all about. So Aircall is a cloud-based phone system that integrates softwares, integrates some customer relation softwares, support system softwares, communication softwares, just to enhance customer relationship management between clients and their customers. So Aircall started in 2014. It's a French-owned. So it started in France, rather, and with this new valuation round, so. With this new funding round, rather, that was led by the Goldman Sachs asset management team, Aircall now is valued about $1 billion.
That's a lot of money.
Yeah, that's a lot of money. And to think the company started in 2014. Exactly. So it started in 2014 and has made so much progress. And they're trying to build an ecosystem for voice, and they're integrating all other communication system softwares, support system softwares. So basically, it's like a hub for call centers. So as an Aircall client, you have access to so many integrated softwares that would just enhance your customer relationship management. So you can record the phone conversations with your client. You get to basically know your client better and basically serve them better through voice.
Fantastic. So it looks like software integration seems to be at the heart of everything that they're doing.
Yes.
So how does that help? Is that just it's like APIs bringing everything into one center or what?
It's basically a hub, like an ecosystem, so to say. And each software integration has a specific purpose. They have AI on there. They're beginning to integrate AI. They're integrating, like I mentioned earlier, communication systems, call center systems, customer relationship systems, all in a bid to enhance the relationship between a client and their customer. So it's like Aircall is the messenger, between the client and the customer. And one specific thing that they've been able to do is they've been able to they started with encouraging small-scale enterprises and startups, and that's how they've been able to grow their brand so much. So now that they're expanding to accommodate or reach out to other big technology companies, basically it's just to encourage and boost customer relationship management. So all in a bit to just keep the customer pleased with client services.
Fantastic. Customer service, we use it here, right?
Yes.
How can you see improvements to what they're doing to customer service as we know it? When you think of call centers and calling in and so on and so forth.
It's something that people will generally be accustomed to. It's a welcome idea. If we look at if you have an issue with maybe your phone, or you have an issue with a brand, maybe you just bought a particular outfit from a client, and this client now can reach you even if you're miles away. This client can reach you, and you have your phone calls recorded, so there's no misplaced information. They can always refer back to the information to make sure that you get the best of their service. And the truth is this: for them to have been able to harness or see the loophole or communication gap when it comes to voice, because a lot of companies or a lot of people are moving towards visual interface, visual analytics, reaching out to clients via video calls, and they have seen the communication gap with voice. So even if I can't see you, even if you can't see me, we can communicate, and I can get to know your problem and solve it without even seeing each other. So they are trying to bridge that communication gap with voice and just enhance the customer relationship management process.
Does that lead to is there any fear of job losses with CRM? If you integrate CRM into one spot and you no longer have to be transferring here and transferring there, and everything Any risk there?
There's that risk because it's almost as though one software would replace the job of a human being. So there is that risk. But at the end of the day, the software needs human beings to actually run it. It doesn't completely replace the work of an individual because as much as they have voice recording systems that could, if let's say you use the Aircall, you're using the Aircall, a client calls, if the customer relationship officer is not on set, there's an AI that has the person's voice recorded on it that could actually say, oh, this person is not, that transfer the call to another customer relationship officer. So at the end of the day, it doesn't really take the place of that person. It just enhances the process to ensure that there is no communication gap whatsoever.
Great stuff. All right, cool. So from tech to donuts.
Yeah.
Isn't this the second time that Krispy Kreme is going to the public markets?
Yes.
What's happening? What's happening here?
So Krispy Kreme, the donut chain that started in 1937. So in North Carolina, and the brand has grown so much from then till now. Although there were some hiccups in 2000, the company, after going public, the company got bankrupt, filed for bankruptcy, and fast forward to 2016, JBA and a German investment company, bought Krispy Kreme at about $1.35 billion, and the company went private from that time. So we're looking at a series of, evolution for the company, and now the company is going public again. A significant thing is, for the company, in 2020, the company's revenue grew about 17% to $1.12 billion. So meaning that they're making progress. As a private-owned company, they were able to harness the needs of customers, make it more modern, add a lot more things to their menu in terms of just donuts. You go there, you're seeing glazed donuts, you see chocolate-covered donut. There's one with sprinkles. Basically trying to meet the new age taste buds, basically. And with that, they've been able to grow even to the international space. I mean, we have Krispy Kreme here in Nigeria.
We do.
So, yeah, we do.
We do.
so there is that progress that they've made. But right now, they're going back to the public space. And JBA said that they're doing this during the filing to get enough revenue to repay debts and just basically boost the company's revenue and income space. But even though they're doing this, JBA is still going to hold a large chunk of the shares of the company. It's about 38.6%, while 16.6% is going to go to the public, and the remaining 44.8% would go to minority investors. So yeah, that's what's happening with Krispy Kreme right now.
What about the IPOs we've seen in the United States? Are they attracted to what they're seeing in the markets? And what about that?
Yes. Okay. So there is an inverse relationship between interest rates and stock prices, and once there is a decline in interest rates are pretty low, we always see a rally in the capital market, equities market, and that's because investors are looking for where they will get more yields. So, and currently, the U.S. Fed has left interest rates near zero. Inflation rates are increasing. Inflation rate is increasing, and now we're now seeing this rally in the IPO in the IPO and capital market space. And so when we look at that inverse relationship, we can attribute that to this. So there is this frenzy going on, speculative activities. Investors just want to get more for their money. So that's what's happening in the IPO space. I mean, between 2020 and 2021, the US IPO market has actually increased. We've seen a lot of IPO issues, IPO offers, and that increased in 2021. That's so far in 2021 to about $171 billion from 168 last year. So that we can attribute that increase in that, the increased activities in that space to the fact that interest rates are still near zero, inflation rate is increasing, and there is this, huge speculative activity just going on in the capital market space.
So,
and market space.
Are you worried about SPACs? Do SPACs worry you? the special acquisition companies. When you look at the kind of, I mean, let's see, look at those numbers. I mean, they've just spiked. We look at Q1 2021.
Yes.
We're not even completed yet of 2021, and it's already equal to what we saw in 2020.
Yes.
Are you? Because I know the SEC came out recently. That's the SEC in America.
Yes.
And said they want to write new guidelines for SPAC. So does it bother you at all?
I mean, companies would definitely try to take advantage of whatever they can take advantage of to make profit. They're not in business just to, lick their lips and say hi, hello. So they're there to, of course, so they're there to make money. And whatever avenue they can make money from, they will take advantage of that. And the Spark is, it's quite unique because the company doesn't even have to be listed for them to actually go on Spark.
Right.
So they're going on Spark to actually buy a company, within the space of about 2 years. So it's an opportunity for growing companies to take advantage of, and if they can't take advantage of it, I mean, why not? So it's something that's going to definitely raise eyebrows, especially with the fact that we're seeing a rally, and the big question is that will this rally continue? And companies that are taking advantage of this, what do they stand to gain, or would they lose in the end? Especially for Krispy Kreme that has come from a background of being bankrupt after going public.
Exactly.
So, but at the end of the day, if you look at what they're planning to do, so their share price is going to be within the range of $21 to $24.
Yep.
And if and when this happens, we could see their valuation increase to about $3.4 billion to $4 billion. Right. So that's good news for them in the end, and considering the fact that they are still being managed by a private-owned company. So there's a lot of stake there, and the company will definitely try to, make sure that they make enough profit to do whatever they want to do by going public.
Fantastic. I want to get your take on Amazon and the Plus AI, the 1,000 trucks that they've ordered. What kind of bets are they making on automotive, or rather autonomous vehicles with Amazon here? Yeah.
So let's just start with the fact that the digital space is fast skyrocketing.
It is.
And everyone is going to keep taking advantage of it. Artificial intelligence, going to keep taking advantage of digital innovations to enhance their business. Amazon, we know it to be a very vast e-commerce company, and they have a lot of distribution chains. So they want to keep their services running. And with the report that we've been seeing concerning labor shortages in the US, this is coming pretty handy for Amazon. They're doing this to, make up for that labor shortage in terms of truck drivers and all of that, and service their customers better. So there is that fear of this. If Amazon is able to do, they have even the fact that they've bought it, and if they're able to sustain this, considering the fact that now they're probably going to buy shares of this company,
right,
meaning that it's a long-term project for them, something they plan to sustain. So it's raising eyebrows or raising concerns for other big tech companies that could probably continue in this route, and how that's going to look for people who are laborers within this field. Yeah. So are they going to be displaced? What's going to happen to their jobs? Because this is a self-driving truck we're talking about.
And there are safety risks too.
Exactly. So although, because what I was reading about is...
We got to wrap up. See, this is a fascinating conversation. We'll bring you back. I know, there's more to get into. Dume BEK, analyst at Financial Derivatives Company Limited. Thank you so much. Very interesting conversation.
Thank you.